GSTR Analyzer analyzes the raw data available on GSTN server and gives insights on the various sale and purchase transactions to the lender. Digital lending software platform originate loans and is powered by SCORME APIs for determining loan eligibility using analysis across financial statements. Credit monitoring. Highly flexible and scalable software, enabling the lender to analyze large volumes of data as per requirements. SCORME, a leading fintech company in India. Get in touch to know more. SCORME Solutions and Resurgent India presents virtual session on enhancing credit access through digital solutions. Mr. Praveen Khanna, Vice President, SCORME Solutions. Praveen Khanna is an alumnus of the Indian Institute of Management Lucknow. Praveen has rich BFSI and technology experience of more than 20 years. In his earlier role at a London-based financial services firm IHS Markit, Praveen worked in the area of new age banking platforms for global investment banks and buy-side institutions, and saw the journey from paper-based contracts in over-the-counter derivatives and syndicated lending to digital models. Mr. Kunal Kitpal, Chief Risk Officer, Hinduja Leyland Finance. Kunal is the Chief Risk Officer for Hinduja Leyland Finance Limited, who are one of India's leading vehicle finance NBFCs with a focus on urban and semi-urban markets through a vast network of 350+ branches and 1,550 business locations. He leads the risk management and governance practices for a diversified range of products and customer segments as the company finances wide range of products like commercial and personal vehicles, which include medium and heavy commercial vehicles, light commercial vehicles, small commercial vehicles, cars, multi-utility vehicles, tractors, three-wheelers, and two-wheelers. Mr. Venkatesh Kannappan, MD and CEO, Aham Housing Finance. Shri Venkatesh Kannappan, BE, EEE, MBA Marketing and Systems, PGDSM Software, was born in the cultural city of Tanjore in the year 1976. He brings over 2 decades of rich experience to the table from the banking and finance sectors. He has a strong background and expertise in startups, steering business, risk management, product development and organization building. Revenue generation and profitability for startups is his strength. Mr. Sunil Vashisht, CTO, Lone Tap Financial Technologies. Mr. Sunil is detail-oriented and has the right blend of technical and domain skills. He has worked with IBM for more than a decade and has also worked with other industry leaders like Oracle Financial Services and HCL Technologies throughout his career, which spans across 20 years. He has been key in leading many projects to success within strict timelines with his technical knowledge and agile leadership skills. Mr. Girinath Devi, Founder Member and Director, DG Money Finance. Mr. Girinath Devi has a successful career spanning over a decade. His journey started at Deloitte and he was notable in handling intricate financial audits under international standards, showcased his expertise in navigating complex financial landscapes. Girinath Devi's unwavering focus on driving excellence extends to his meticulous attention to incentive schemes, particularly the Service Export Incentive Scheme by the Indian government, for Axos.
Hello and a very warm welcome to our esteemed panelists and our audience today on this very pertinent and contemporary session about enhancing credit access through digital solutions. My name is Praveen Khanna, and on behalf of SCORME and Resurgent India, it will be my privilege to be your host today. We are joined today by an esteemed panel of members from the banking, fintech, and financial services industry. And it will be our honor and privilege to learn from their deep domain experience and the journeys from physical to digital lending. Now, before I invite our panelists for their views, just a few thoughts on the enormous growth of digitization in banking in India. Now, there are two very positive themes that are underway, which can make India a multi-year decade. One is the investment in the physical infrastructure, the roads, rails, the airports that we are witnessing. And of course, the second is the digital infrastructure. Digital banking and fintech is increasingly becoming omnipresent today, right from wealth management, insurance payments, and of course, digital lending. The expected market size is growing from almost 2 lakh crores to 8 lakh crores by 2026. India, of course, is the third largest number of fintechs globally after China and US, and has the highest adoption rate at almost 87% as compared to a global average of 64%. There are net 700 million users who are accessing internet via mobile in India, and it is estimated to reach almost 1.5 billion by 2040. So digital transactions themselves are touching almost 72% by 2025 and are expected to exceed the physical transactions that are happening in India. So right from the first phase of digitization in financial services, which happened with the opening of the Jan Dhan accounts, to the second phase via UPI, I believe we are now in the third phase of digitization, and this is being led by the growth in lending and wealth management. We now have various loan service providers, neobanks, the emergence of the new account aggregator and Open network. Another very pleasing statistic is the growth of rural internet in India. That's been growing almost at a 30% CAGR. The account aggregator model itself is growing 28% on a week-on-week basis. India's digital lending market, which was worth USD 270 billion in 2022, that's reaching almost 350 billion at the end of 2023, and almost USD 1.3 trillion, representing a growth of 5x within just this decade. So there are various positive factors that are making their presence felt. The other interesting element is the emergence of millennials and the demographic dividend that India has. So more than 50% of the consumers in India are showing a preference and acceptability for EMI-based cards when it comes to shopping or for any credit. Overall, more than 3/4 of the borrowers are now being led by tier 1, tier 2 cities. And with Gen Z and millennials being really optimistic and buoyant about digital lending services, there is a growth in the popularity of online loans. 52% of India's population is now digitally active, and therefore lending via fintechs today, which stands at almost 36% versus 24% from NBFCs and 22% from banks. So fintechs are clearly leading the way. There have been various positive steps that the government has taken. Regulators have made various positive moves. Nirmala Sitharaman, our finance minister, has plans to set up the digital public infrastructure for agriculture, and an open standard for interoperable public good. An agriculture accelerator fund has been proposed. Government has also proposed centers of excellence for AI in top educational institutions. So these are some very positive themes in India, and yet there are some challenges that still remain. Frauds in lending and digital payments, those are a constant source of concern, and that can really impact the borrower belief. We've recently witnessed that 94 digital lending apps have been banned by MeitY. There are privacy concerns on data. The gap in credit access, especially on the MSME or the new to credit customers, that also continues to be a big challenge. Our credit to GDP ratio is much lower as compared to the emerging markets. So we have a very diverse panel of experts from the PFSI industry. First up, I'd like to invite Mr. Kunal Karpal. He's the CRO at Hinduja Leyland Finance. Kunal has over 23 years of work experience in the area of risk management, operations, process reengineering, and internal audit across retail banking, and life insurance industry. I'd like to ask Kunal first, how do you see digitization evolving in the lending sector over the next decade? And what role does he see on the AI/ML based underwriting? Kunal, over to you.
Yeah, hi. Thank you, Praveen, and thank you, Research in India and Score for having me over here. The views that I'll share over here will be my personal views and not the views of my organization. So coming to the answer, and I'll rather take the clue from you, Praveen, and I'll throw in some stats on this front as well. As a just a few stats which will give or set the tone right. The emerging digital lending companies in India, have witnessed a CAGR of growth in CAGR of about 39.5% over the last 10 years. And the Indian digital lending space has received almost around an excess of about $1 billion as investments. The industry, as per the IIFL India report, says that the industry is expected, the Indian digital lending market is expected to grow to $500 billion by 2030. So, the investments which were at 1 billion are expected to grow 500 times. And, these typically the areas, where I believe this particular digitization will work would be in the five areas as I've categorized them. First would be in the area of artificial intelligence, where the fintechs have helped in terms of innovating new products. There are about 1.2 billion unbanked people across the globe which can have access to now financial services thanks to the AI and ML engines, which are reaching out to people based on their needs. And this is again a study which was released by World Bank. And what these AI and digital models are doing, they are playing a crucial role in terms of assessing the borrowers and also the credit worthiness along with the risk in term by automating the underwriting process and reducing the manual errors. The second area, which is coming up very fast is the personalized loans. And again by 2030, it is expected that the the digital lending lenders will gather more and more customer data, which could help them in giving more personalized loan products. And lenders can leverage these at a real time from a real time response, and personalized lending will become the new standard in the industry. We are already seeing that for example, today if you want to shop at a particular e-commerce website, the before even you want to pay, there is a personal lending offer which is available for you, and sometimes those offers are actually with clubbed with certain other cashback or some other beneficial offers for the consumers. On top of it, with the open network digital commerce and open credit enablement network, this is only going to empower it further. The other one, would be, the empowering of the financial access. What I mean by this is that, what we will see in the coming years, as per, my understanding and my research says that, there would be a single marketplace, and this will be a marketplace from a financial marketplace perspective, which would allow borrowers to access multiple financial services, which is insurance, loans, investment, savings, all under one platform, integrated, expand, which has integration opportunities, expansion opportunities, partnerships, collaborations, and this is the way I believe that the future is lying for us. The fourth one, which our own is a central bank has also done, which is the digital currencies. We've been seeing across the world that approximately about 1.7 billion people have the access to digital currency, which is again a stat published by World Bank. RBI has also come out now with the central bank digital currency, which will provide a lot of opportunity for transactions that are recorded, that can be recorded in decentralized ledgers. It will make it impossible to modify and tamper this data. And also for people who do not have bank accounts, they can also basically operate through the digital currencies. The fifth and the last avenue which even we are one of the participants in that, is the alternate lending model, which is the peer-to-peer or the co-lending model. And today the peer-to-peer lending allows investors and borrowers to connect directly with the online platforms Again, according to Statista, the digital peer-to-peer lending is expected to reach about $1 trillion market by 2025. And the co-lending, is a, I would say a very, very strong amalgamation between, the experienced banks, the experience of the banks, and the reach of an NBFC, which allows, this beautiful strategic alliance, which is called as co-lending, where, we can jointly extend the credit facilities to the borrower. You can leverage the strength of both the entities, like I said earlier. One can facilitate the access to credit and the other one can, help in potential growth in the asset. So I think these are the 5 areas where I believe, that there will be, the 5 areas of focus for the next decade over the digital lending space. And like I said, $1 billion investment, $1 billion US investment to $500 billion of investment, is an amazing, road ahead for us.
Perfect. Thank you so much, sir, for sharing those views. And I think that number of 500 billion investments will stay with me even post this discussion. I think that 500x growth, I think that really maps out a phenomenal growth from an industry standpoint. I also love those 5 themes that you've shared, sir. The use of AI, the personalization of loans. I think one of the challenges earlier has been in the banking model is it's more a push sell product from the bank side. Here, once we have the alternative data, we can actually build customized products more from a customer standpoint. Yeah. I think that's what I'm hearing from your perspective. I think CBDC, I think that I can clearly foresee that as being a game changer. And of course, the alternative co-lending models, where you rightly said the experience on the credit analytics from the banking standpoint, the risk standpoint, and the reach from an NBFC, that makes it a very compelling partnership. So really, thank you so much for sharing those views, sir. And I will come back to you with more questions, sir, later. But I'd now like to invite Mr. Sunil Vashisht. Sunil, of course, is the CTO at LoanTap Financial Technologies. He has rich technology experience through Oracle Financial Services and HCL. And I'd like to ask Sunil, how do you see blockchain technology impacting lending and credit assessment, given your rich technology background? What potential benefits and challenges do you see there?
Sorry, thank you, Praveen. And let me start with, I just unmuted. Okay, I think the blockchain technology is very new in financial sector, right? At least in India, maybe in Europe and America, it is somewhere there. And for blockchain technology is primarily we use for the crypto and all, right? But how it is impacting our financial technologies or in NBFCs, right? So that is very, very exciting. The reason is because this has 2 major characteristics. One is the decentralized and second is the immutable. So these 2 characteristics makes is applicable in financial sectors. How it does it, right? See, in current system, we are basically doing the credit scoring and risk assessment, right? Based on like bureaus, right? And the bureaus is nothing but a centralized system, centralized institutions. We have a challenges, at least for 2 categories. One, if they don't have the credit history. And second, if they have a poor credit score. So this problem can be solved through the blockchain technology. How? See, what happens is, as I mentioned, blockchain technology is a decentralized, meaning that there is no central authority or intermediary to control the network. In this case, it's a bureau, right? Second is the transparency, which is, we say, the altered free. So what it does in blockchain powered credit scoring and the risk assessment, borrower data can be stored on the blockchain, right? Making it accessible to all the lenders, all the networks equally, right? And that eliminates the centralized credit bureau team, right? And then it basically, which can be, when we talk about the centralized credit bureau, it can be biased and exclude certain individuals, which I mentioned for the new credit, right? and if they have a poor credit. So what it does certain things which overcomes these problems. Another thing is the smart contract, right? Smart contract is nothing but the self-executing contract which get enforced when the term and condition are met. So this can be implemented through the blockchain technology, right? And as I mentioned, blockchain technology are immutable record. So what happens is, if it is an immutable record, meaning that once the transaction is recorded, right, it cannot be altered or deleted, right? But you might see in the credit score that can be changed based on certain parameters, repayment, DPDs. And another things I will spell it that when we talk about the bureau, right, we take the score. If the score is X, then we say, okay, this is credit score and paying capability, right? But then there are many other factors other than the score. Maybe the score is better, but there are underlying details are different, right? So blockchain technology is basically also overcome on that, right? What it does is basically improve the accuracy. Blockchain technology basically improve the accuracy because it enables the creation of the tamper-proof and immutable record, right? It basically enhances the transparency. See, any participant in that network, right? So whenever somebody is lending, giving the loan, right? Any participant, they have all the access of that network, right? Here it's a centralized. So there is basically a decentralized process, right? It also does the faster process because the credit score and risk assessment is equally available to everyone, right? It also has a lower cost because what we can do is, as I mentioned, when we talk about the credit score through bureau and all, right? We take the score, but that score is not good enough to evaluate the credit, right? So that is why the bureau give us the details, right? Here, we can use the complete data set of the what we call in ledger record, right, to automate that process. So that will reduce the processing time and in fact lower the cost, right? And as I mentioned, this is decentralized mechanism which will give you the greater access, right? Greater access in the sense that all the participants into that they have the equal access without a fee, right? And of course, it enhances the security, which I mentioned because of the tamper-proof. So in net and net, what I'm trying to say, the blockchain technology play a very critical role in NBFC or you can say fintech by introducing with credit assessment process and which can be used for the lending. And how it does by the two mechanisms. One is the decentralization of nature and second is immutable of nature.
Perfect. Thank you for sharing those views, sir. So just to follow up on that, are you seeing being deployed practically in your experience as well? And could you share some light on that as well?
Yeah, as I mentioned in the financial sectors, right? The financial sector, it has not been deployed primarily, but the use case is there, right? Because we have a software of the blockchains which can be used for making as a network, right? So what happens is, suppose you have a lender, right? And you have a borrower. Unless we go with the decentralized mechanism to implement that, right? Of the credit score and all, this cannot be used. The use case what I gave, it cannot be used until it is being agreed by all the lenders, right? So
Understood.
what happens is, but if you want to use in your premises, right, as a blockchain, right, then there are different use cases, and then we can discuss those. But those are different use cases, and you can integrate it with the AI. So AI, how it will does it that the scope of the AI is that when you have a AI and I will say ML, the scope of the AI is basically analytics, right? You have the data for analytics, but how do you do the decisioning? Because if the computer does the decisioning based on the historical data, right, or the data what is available to us, that makes the system faster and makes it more sophisticated and more error free. So that can be a use case for blockchain when we are implementing through the AI and ML.
Got it, sir. So I think what I'm hearing is all the elements to reduce risk from the borrower standpoint, right from eliminating bias, enhancing transparency, accuracy, lower costs, faster time to credit. All those elements can be implemented via blockchain. All it needs is the industry participants to come together. Once they are on that blockchain, then the ability to share data via a decentralized manner, that will happen then.
Yes.
Absolutely. Perfect. Perfect. Thank you. Thank you so much for sharing your views, sir. And I will of course come back to you with further questions as well, sir. But I'd like to now invite Mr. Venkatesh Kanappan. He's the MD and CEO of Aham Housing Finance. He, of course, is from the cultural city of Tanjore and brings more than 2 decades of rich experience in the banking and finance sector. So I'd like to ask you, sir, with the growing reliance on data-driven decision-making in lending, what steps should financial institutions take in order to ensure ethical use of customer data and avoid biases in AI-powered credit decisioning? Mr. Venkatesh?
Thank you, Praveen. I heard you. Good afternoon, all. I'll just try to dwell on the matter directly. The most important thing that we about data when we collect from the customer and process it for a very informed decision is that it needs to be highly transparent. The data transparency that we do in form of collection, usage, processing, etc., should be of the highest level. The more transparent you are, and you educate the customer about how are we going to use the data and how are we going to keep the data is the most important aspect. Today, we all realize personally, we allow our mobile numbers to be noted for at a hotel booking or possibly anywhere. But within a couple of days, within 10, 15 days, whatever measures you take, you will find a call from a third-party telecalling center. So that is where I want to make you understand what is the kind of breach. This data or the mobile number which I had given was for a specific use, whereas it was actually used for a different purpose. So that is what I want to first highlight, what is ethical and what is not ethical. You try and talk to most of the telecallers who call you, they will not actually tell you the source of they're getting our phone numbers. So somewhere that's the point I want to highlight. What is the levels of transparency that we need to maintain when we collect customers' data, which might include customers' age, marital status, caste, creed. For decisioning, you can ask almost, and we're also asking this data from a customer where he's inclined to give it to you because we are going to sanction a loan to it. But this information shouldn't be used for various other purposes apart from what it was originally thought about. The other thing is the quality of data that we collect from the customer and the diversity of data that we have. So we collect so much of data. We collect around 350 to 400 data knowingly or unknowingly from a customer just to sanction him a loan. But we don't revisit the amount of data which is actually required. So for you to avoid an ethical or for you to maintain an ethical standards within the the assessment process and all that, you may have to only collect data which is actually required, and you should educate the customer. And in case if you have also collected the data which is much more than a requirement, you should also have a process of deleting those data or cleaning the data sets that you have. So that's more important. The other one is that when you design an algorithm, I heard people talking about machine learning and artificial intelligence based decisioning and all. But somewhere we shouldn't be having a program which is going to lead into some biased decision. Suppose if I have to say a practical example that if I say that customers in Vijayawada is going to pay on time, I'm giving an example, or a customer with the age group of 35 to 40 is going to pay on time, or a particular caste is going to pay you on time. If this is the kind of algorithm that we are going to develop, then you will actually end up having a biased decision. And this is not ethical. So why? Because for a lending decisions under RBI, you don't have to include the caste, the ethnicity of the customer, etc., etc. So point I'm trying to make is that the customer should be able to, or you should be able to explain to the customer as to why this data is being collected. And you should also allow the customer to challenge the decision that you have taken basis the data that you have collected. At regular intervals of time, it is better that we validate, we test our data, usages, the information that we generate our data on a periodic basis if we are able to test them so that we are fair to the customer. So possibly the levels of breach on ethical data usage and all that of customer can come down. The point I'm trying to make is that just keep it very simple. Only obtain those data from customer which are actually required. Design and program, design and rule engine basis the actual requirement or the actual risk that you may have to take. See, there has to be a human oversight. We are talking about artificial intelligence, machine learning, and all that. But ultimately, the human experts should actually monitor the performance of AI systems. So, something which is not being monitored, which you don't monitor, you don't see them giving you any desired results. For you to handle situations, you need to have human oversight. So it cannot be left to artificial intelligence. And I'm not saying that artificial intelligence is not capable of taking a decision, but that has to be frequently visited. Therefore, regular audits, compliance, and a regulator framework around this are all well complied with. In the process, ultimately, what you do is that your ethical practices, you engage in industry collaborations, you engage with the customer in order to have highest levels of trust, maintain fairness, etc., etc. So these are something that I wanted to highlight about how data can be actually used. Today, we are collecting data which is much more than what is actually required to take a decision. So the first and foremost to maintain highest standard of ethical data usage will be to only collect as much as what is required.
Perfect, perfect. Thank you. Thank you so much for sharing those views, sir. So I think what I'm hearing there is a collection of data, then what is the diversity of data that we need for decision making, and some sort of oversight even over the AI. So while AI is welcome and automation and speed of decision making is all welcome, equally inherent biases should not be introduced in the model, which then actually eliminates the idea of financial inclusion in India.
It's not only about financial inclusion. In the process of you selecting or doing a cherry picking exercise, you will possibly try to develop a concentrated book or a concentrated loan book about one set of customers.
Correct.
So
correct.
So if you don't have an oversight, or if you're going to collect data and have too much of permutations and combinations, just to think that a well-informed decision is out of a very complex equation and only an artificial intelligence can solve all that, is a myth. Basically, you could not remove the human element out of a decision-making process in lending business. You can possibly AI and ML and all that can be biggest enablers. It can possibly automate lot of processes that we have, but it cannot substitute for the creativity and the human intelligence and the touch that we bring on table while you decide to lend somebody. It's not about distributing a possibly what do you call any other non-financial item. Then possibly all this can. But in a financial element, there's an intelligence that is brought by the human oversight, which shouldn't be substituted so that you end up doing a biased decision towards, could be anything. You might possibly end up doing a particular caste in an area. You might particularly end up acquiring customers of particular age group. You might end up customers funding on specific assets, which which will not be your stated agenda. So point I'm trying to make is that the overuse or the whole objective should be around collecting the required data and also cleaning the data sets that you have periodically, which will possibly help you collect only so much of data and also maintain their standards. Because tomorrow's challenge is going to be everything around us is going to be known to each other. So if we have to
Right.
if you have to honestly bring in some discipline around that, and if you're going to respect a customer's privacy, customers, what you call the transparency levels, or whatever customer related grievances, etc., you be for sure that you only engage with those extent for collecting information about him to the extent of what decision that you need to take.
Perfect. Any thoughts, sir, on the data?
I'll
So
just
sorry,
add-
go ahead, sir. Go ahead, sir.
One point on what Venki said, and this is a data point. I was reading, about a report on Accenture, which says that the banks have managed to raise almost around 34% of their revenues from 2018 and 22, the primary years of, when the AI actually came into being, after investing not only in AI systems, but an AI plus human collaborative system. Okay, so that's an important data point that what Venki was making. It's easy to say that AI has done this, but AIs are also made, or the codings are also done by humans behind it, and on top of it, there is a continuous validation which is required, and at the end of the day, there has to be somebody at the back of it who has to control it. Yeah,
Absolutely. Perfect, sir. I think
just Praveen, Giri here. Just adding to one of the point of Venkatesh is that yes, collecting data is not. We need to be very, very cognizant of the fact that we are collecting and we are scrubbing someone's data, personal identities, and other things which are very much private to the individual and the basic fundamentals of human life. Along with that, it also becomes the responsibility of every registered entity to safeguard the data, which also becomes very much paramount. And in the coming days and in the coming budget sessions, we will be able to see that more and more emphasis on the data safety and security after you collect the data. So as registered entities, we also have to be cognizant that it's a responsibility on us, and not just we need to have more and more data.
Giri, just to follow up on that, perfect note for us to introduce you. I mean, any thoughts on the data protection bill and the sort of ethical considerations that experts believe we should have when we're deploying AI-based solutions in the industry? Your thoughts?
Sure, Praveen, and thanks for taking it as a flow. So yes, on the data protection bill and on the other stands and stuff that the government and Team India is doing, not just on the data safety and protection perspective, but also from a regulation perspective, a lot of things are happening in this space, especially on the data space, and we are able to see as registered entities or as REs of the PFSI sector, we are able to see that more and more emphasis is on the data protection and data safety. And we are also able to see a paradigm shift from the regulators from not just understanding how the data is stored and protected, but also from a point of view of how and why this data is required in the first place. So the shift and the focus is changing. Yes, from an ethical consideration that we would require from a development or of an AI and ML perspective is that we first need to have, like, I also have kind of points, and the first and foremost point that I would like to put it across is that we need to have a transparency and fairness in the way we as individuals, as organizations, develop the AI and ML models, because we cannot have a black box kind of an approach. And just in addition to Venkatesh's points, we cannot be discriminative towards any particular section of the society. So as individuals and as developers of this industry and the future AI and ML model creators, we need to be very, very cognizant that we take this technology as technology. What is technology? You have an input, you have an output, and there is in middle of the middleware is more on the processing side. So we need to develop our technologies in a way where we have complete fairness and transparency, and we know what our AI and ML models are getting trained and what our AI and ML models are getting used to from a decision-making perspective. Because at any given point in time, we cannot have any bias or any kind of segmentation or orientation towards any particular part of the society. That's first ethical consideration that I would bring into the table. The second ethical consideration that I would always have in mind as a developer or as a part of a development and contribution team is that as we develop, we always need to have a focus, edge case scenario about data privacy and security itself. Our development process per se should be in a way where we do not just focus on the output and the way in which it is processed, but also we also focus on taking care of all the edge scenarios whereby we are ensuring the data that is getting inputted or the data that is getting transmitted is getting completely either encrypted or it is getting properly processed to ensure the data privacy requirements of the organizations are met. And at any given point in time, we do not fall prey for any of these hackers or people whereby the safety of not just our data, but even our customers' data from their own data privacy point of view. Next thing, whenever we think about development of an AI and an ML model, be it in digital banking or be it in a core fintech kind of an environment, we need to be cognizant of the fact that we are developing a model and that model gets fed upon data or information of any individual or any organization or any particular subject. So when that is the case, then we also need to be cognizant of the fact that consent and approval and the required permissions are put in place before the customer or the organization whose data is getting processed is taken care of. Then comes the last part, but the part that everyone would actually not want much to ponder upon is the regulation and accountability. Yes, we need to be cognizant of the fact that if we are processing a data or if we are getting data from our customers or any third-party institutions, we need to be cognizant of the fact that accountability still lies with us, and we need to ensure that all the required things are put in place to ensure regulations are completely and carefully met.
Perfect. Thank you, Gurinath. Kunal sir, just to continue on that thread, how satisfactory has the policy response been in shaping the regulatory framework, around all these data, AI issues?
I think regulator has been pretty much watching the entire space, and I guess the entire data policy or digital lending policy, as well as the recent bill as well. Both have been bang on time, and also in terms of the requirement, it is something that has been there for a long time as part of the draft guidelines, and now lenders have been given sufficient time to now even implement that. Today, if we see the challenges around the RBI stating that how digital lending or how futuristically lending will be, they are not only saying that you have to stop ABCD things, but they are also suggesting that you can enable ABCD things as well. So for example, the entire digital banking unit concept, that is seen as a positive outcome of this entire framework as well. The other pieces which we briefly touched upon earlier in our conversation, which is the ONDC and the OCEN networks, they are again enablers. So it is the way I see it, as a individual, I would say that it is a very balanced approach that today, the Reserve Bank of India has taken. The guidelines have been fair from both the sides. You can, use it from a financial inclusion as well as the financial growth as well. It is also going to enable the rural sector, which today if you see, and I guess you were only giving that stat in the introduction, that we have so many mobile users. I think 700 million is what you said, if I'm not wrong.
And 30% growth CAGR for rural
Correct.
internet.
Correct. And if you see what are those people typically using the mobile phones for? Not only connectivity, but even watching YouTubes and WhatsApp of the world. So which means they are using the internet today. They are having those access. I think with these guidelines coming into place and with the digital banking units taking shape, this will also enable them to get a bit of information and cybersecurity literacy as well. So that is also a very important, I would say, outcome of this particular activity, which is not being highlighted that much, because while they're using their WhatsApps or the other social media platforms, they are also not fully aware of some of the risks which are there in the digital lending space. And who better than their own bankers or their own thing, they will be guided by that these are certain things which you should not be doing. Like we've been seeing multiple messages. I do hear a lot of people especially in my relative side, saying that why are you banks sending so many messages of OTPs and all that. I said any communication cannot ever be an over communication, because over communication is also a form of communication. At least now there is something called OTP, right? You cannot share it. At least you are aware of it. So that's how the banking and financial services industry will also be enabling I would say the entire information and cybersecurity literacy across the sectors of the country which are not that much banked. And once they are getting banked through the digital banking route, I think they will get a fair amount of understanding of that. And with RBI, like I said earlier, coming at the right time with the right set of guidelines, which is not only restricting as well as controlling things, but at the same time, allowing you to grow as well.
Perfect. Thank you, sir. And Sunil, just to come to you, insights on how customer data privacy concerns can be addressed. Would love to hear from a technology standpoint how that can happen.
Yeah, sure. See, the data security and privacy is already being taken as a granted in India earlier, right? Until now, you can say. In Europe, right, we have a GDPR, right?
GDPR, yes.
USA, we have a CCPA, that is protections bills. But in India, maybe until you can say 2020 and so, it was not there. But when we have a digital data protection bill, right, in 2022, the government is also serious in protecting the data, right? It is basically, you can say, cultural things as well. So in India, we tend to share so many things. So we don't mind to share. I think I just said, well, Venkatesh, right? Even OTPs, right? So, but that is the lighter note. The challenge is what we have now, but now as a customer, they are getting educated. And of course, government is making a very big push so that the data security and privacy are in place, right? So with the bills and all, as a financial institution, we need to comply that. So I will brief some of the things, right? As a lender or as an NBFC or bank, we are doing, and we need to be very strict on that, right? So I think multiple times in these sessions, we have talked about that we should collect only the data which we need, right? Whether it's from the human assessments or through the machine learning or whatever it is, right? So first, we need to have a safe data collection and storage, right? So safe data collections means we have to collect the data which is necessary. We need to store the data which is like customer consent, right? If we ask customer to that, okay, if we can't process your loan, can we give this for further processing? where you can meet your requirement, right? So we should also see the consent of the customer. So this is very basic things, but we should do it. We tend to overlook this situation, right? Second comes from the technology point, as you asked, right? The encryption of the data. See, when we transfer data from, like, online is a big thing here, right? People are applying online. So whenever the data comes from their desktop to lending server, right? We use SSL, which is not a very new in the market, right? We use nowadays we are using TLS, transfer layer security. So these are the enabler which will protect the data so that anyone who comes in between hack the network, right? They don't get the customer information. Otherwise, they will tend to hack the information and leak the data privacy and security, right? So that can be the second point. And then nowadays, right, authentication at multiple level, MFA, what we call, right? That is again a key enabler to protect the customer data. Sometimes the password getting hacked, being compromised, being shared, but through the MFA, multiple factor authentications, right? We make sure that we are giving the access to the right person, right? So that is another key enabler, or from tech point of view, right? Then what we should also do, we should also concentrate on reducing the cost and simplifying the data protection, right? So what is happening in startups and NBFC, they sometimes try to, cut the corners, what we call, right? Cut the corners. We take a kind of compromises on the effort they need to spend on protecting the data security and privacy. So that we should look into it, that we are not doing that, and we are following the RBI guideline, right? Then nowadays most of the schemes and all these things require a smartphone enable, right? So they share the some of the keys, and they do that. So that is also a technology enabler. So nowadays, smartphone, maybe you can give the statistics, right? It is coming up in Indian consumer, right? So we can leverage that smartphone capability wherever it is. Maybe the percentage wise, we know we are not 100%, but I think that's significant, right? So we can use the smartphone features to protect the data, and it help us to not go into the unwanted hands. So these are the certain things we can do from the data security and privacy from technology point of view.
Perfect. Thank you. Thank you. Mr. Venkatesh, sir, the rise of digital banks has, of course, transformed the financial landscape. But this also raises concerns on the accountability side. Any thoughts on that front, sir, from a digital banking standpoint, and accountability, especially from the accountability perspective?
Thanks, Praveen. I heard the other panelists speaking, so I have to mention a few things. See, what I want to say is that, first of all, when we talk about digital transformation, about banks and all that, it's not something which has happened in the last 2 years or 3 years. It's been happening ever since 25, 30 years. So on a very regular and a phased manner, now we have started to talk aloud about the transformations which are taking place, primarily because every second day you have a surprise element. Until 6 months, 7 months back, ChatGPT, I think, at least personally from my side, I had something which was on shelf. Now today, I'm a great user of ChatGPT. 1 year back, Alaska, when I saw the first TV advertisements, this Alaska ad was very inspiring. I wanted to buy Alaska. Now Alaska is obsolete. Today, I don't use Alaska. 4 years, 3 years, 4 years back, I had some chatbot, which was the new toy for me. I used to engage with so many applications where the ChatGPT was, I mean to say, the chatbot was very entertaining. So I used to ask some weird questions just to checkmate the ChatGPT and all that. So now I want to first of all place it on record that digitalization is not something which has been happening in the last 3-4 years alone. It's been happening ever since. We talk fintech. Fintech is a terminology more than a growing industry or a or a new sunrise segment. What is bank? Bank in 2000 also was fintech only. It used fintech, and fintech was an enabler or the way of delivering the services of a bank. So they were continued to be called as banks. Now we have banks and first layer called fintech. That's it. So the bank's front end is now being called as fintechs. If I have to talk in a very dispassionate manner, with no offense to fintech fellows and all that, I'm a fintech fellow. The other great change that has happened is today we're talking about banking, where none of us in this panel, neither the audience would be a chartered accountant. We all are engineers. We're all coming from other faculties. So the accountants are being completely replaced by any facets of life. Any person, any individual who can possibly communicate has become a person who can have and engage with the transaction in the bank. To that extent, things have been simplified. So you don't actually have to talk about accountability as a discussion point, but yes, you should be accountable and all that. So there's something which is the bank's responsibility, or the data, the custodian of data will have to ensure that the protection of customers' identity, customers of credentials are being kept. Even today, even after talking so much, I don't think so you will be able to fetch my bank statement. So to that extent, there is some protection. I want to give you simple examples to drive my point. It is not an alarming situation to first of all discuss that there's no accountability in the system, and therefore there might be some exceptions here and there that might always be there. When you bring some innovative solutions, the adoptions might take some time. But what we should be careful about is about the cybersecurity that we have, and I should also be talking about the consequences that a company might face in event of any data leakage or any hacking or ethical hacking or whatever. So there has to be a huge insurance aspect to that. So now most of the insurance companies have started what you call covering cybersecurities and the what you call the event of data leakage, and then damage that anybody would sue on a bank is all being covered by insurances. So accountability per se, I'm saying the compliance, the regulator will play a key role today. The regulator is playing a key role. Today, if you have to ask, it's extremely difficult for anybody to open a bank account. I would even say not possible without a proper KYC. The AML regulations which has come, the anti-money laundering regulations which we have, it is quite stringent for that matter, so that the accountability aspect from a regulator, from the government of India is very high. They are taking it on themselves, they're vesting it on banks, so regulator doing a thorough job on that. With respect to transparency, I would say a lot of services that was originally getting delivered after a face-to-face discussion has now been replaced by some set of questions that an AI or the system generated questions a customer needs to go through as an interview, and finally he gets a product of his requirement. So in those cases, whom will you make it accountable? So ultimately, it is about the IT heads of the company or the CEOs of the bank and all that who deliver the customers the wanted services becomes accountable. So I would possibly stress upon the original point that I was talking about is you develop an algorithm, you have the highest standard of ethical, just collect those data which is required. And that should be possibly a great idea for accountability in digital banking, which involves not only the regulator, even the stakeholder. You and me are also accountable, because I should also be asking the first question, why is this data required? If I'm going to book a dining place, I should not be giving anything more than mobile number. But I tend to give more numbers. I exactly give my second name. I give my first name in full, etc., etc. Therefore, I should also be accountable, is what I'm saying. So it's not about regulator, it's not about customer, it's not about the technology alone, but it's also you and me are accountable. I can give you an example again, just to stress my thing, is that today we use Google Maps wherever we go. many a times we end up at a place where you will not be able to travel with your car because that's a dead end, or it's possibly not motorable, but we follow Google. Now, who is accountable for that? So again, going back to the point which I'm saying is that there should be a human oversight over any single thing that we do, which includes data collection, submission, and all that. So it is a two-way kind of a thing, one from our side, one from the collector's side. So that's my limited point on this aspect.
Perfect. Thank you so much, sir. Girinath, I just want to get you in on this, and the role that fintech startups can play in driving innovation and also alleviating security concerns. Girinath?
Sure, Praveen, thanks. And probably we would be overshooting a bit of time. I would take that liberty to discuss my points on this particular question. See, probably as the previous panelist said, fintech is not something that it has just emerged out of somewhere. In the 1960s, in the 1970s, or probably even in the late 1990s, every bank used to have a proper IT team which would be helping them to do stuff which they were not able to do physically, or the physical infrastructure was not able to up to the mark for them to deliver the service. So that was a part of a team or part of a organization which was trying to transform a particular bank or particular organization per se. Today, just let's move to 2020 and 2015. This particular concept, just take this out, and if you put this across as an organization, not as a part of an organization, but as an organization per se, then comes the fintech angle, which means that every fintech is nothing but previously whatever banks were trying to transform or revolutionize in terms of a customer experience or from a customer delivery perspective. Now you have an organization or you have a group of people coming together to solve a particular set of a problem. So they are per se techie guys trying to solve some problem which they presume that it would be helping the millions of people and trying to be part of the financial inclusion or the Team India growth story. Now, coming from a innovation or from a kind of a digital lending perspective or digital inclusion perspective, whatever a fintech does or whatever we have seen as a transformation right from 2014, there have been multiple important milestones that have been achieved. For example, in 2016 has been the launch of UPI through NPCI, and in 2017 we have started to see a lot of only personal loan service provider apps per se, which would technically be helping us to deliver or disperse loans in less than a day's time. So fintechs have been revolutionizing this space, and they ought to do so in the coming decades as well. The first and foremost thing is about inclusivity, whereby previously in 1980s, 1990s, wherever a bank was not able to reach out, the concept of an NBFC or an MFI used to prop up in that particular segment, trying to reach out to those unbanked people. Today, we are one step ahead, whereby even those particular tasks or particular stuff, an NBFC or people who are not getting addressed by an NBFC or a cooperative bank, fintechs are trying to reach out to, which itself is a very big boon to inclusivity. And in this manner, we are trying to bring more and more part of the population into financial inclusion and not just the financial literacy point of view. Next is on the speed and convenience. Like you name fintech, it is like just like a rocket. Like that's what a normal a layman would understand. They are trying to do something which is quick, agile, fast. For example, we at Digimani Finance, we try to lend loans in less than 10 minutes. Again, it is not just every piece of stuff has been put in place by us, but we are also utilizing a lot of service providers, the fintech players who are helping us in this journey. So speed, agility, and convenience is what a fintech brings to the table. Next important point of view, whenever we are talking about inclusivity and we are talking about speed and convenience, we are also able to see a lot of fintechs are getting enthusiastic in the sphere of risk mitigation and underwriting process. So it is no longer the kind of period where you just you have a good credit score and you are just given a loan. It's no longer that kind of an era where credit bureaus are kind of the key takeaways. For example, before 2000s, there was not even a single credit bureau in India. Post 2000, there have been 4 credit bureaus, and of which a couple of ones have been very big ones. Post 2015, 2016, we are able to see a lot of models that are coming into place, which are not just AI and ML, which is kind of becoming the jargon in the industry today, but have actually been helping to solve those nuantic problems which a credit bureau or your physical underwriting segment was unable to cater to. So risk mitigation is something that is picking up, and a lot of people, a lot of fintech players are trying to solve a lot of problems here, which is very much appreciable. And the last point of view is again a continuation from my first point about financial empowerment. It is fintechs are not just trying to empower more into lending or more from an onboarding perspective, but fintechs are also revolutionizing the industry from a financial empowerment perspective. For example, in one of the parliament sessions, when people were asking about like kya farak hai in terms of UPI getting launched. So in response to that, the Prime Minister was saying that previously a vegetable vendor, he would, if I buy for 60 rupees, or probably if I buy for 52 rupees, and because of the change concept, the vegetable vendor would be only receiving 50 and not 52. Today, because of UPI, I can't do that, or you can't do that. You will end up paying 52 rupees, whereby 2 rupees could be an insignificant or an inconsequential amount, but multiples of 2 would actually lead to a larger sum, which is what fintechs are trying to do, trying to solve financial empowerment, that too on the middle class, and trying to bring more people from the other stages of society. So these are my points and views on it.
Thank you. Thank you so much, Girina. No, I'm conscious of time. I know we've overshot. Any closing thoughts, Kunal or Venkatesh? Any closing thoughts from your end? Kunal?
Yeah. Again, see, when we talk about the particular subject, we should see how much of undermining it might happen to the existing banks and the intermediaries in between the banks and the customer, or intermediaries between the Reserve Bank and the customer, so on and so forth. Like for example, you have a half a dozen payment gateways and you have a 3 dozens of lending platforms today. So today we have a fair amount of licensing. You have a criteria which is fixed for anybody to get a gateway license or to become a lending a lending company, online, etc. But the risk management practices that needs to come in at this point in time, which would possibly become the fulcrum of the whole subject. So a company which has got a classic risk management model or a system will be somebody who will naturally try to hedge most of the things, will try to bring the balance, be it the anti-laundry measures, or be it customer satisfaction or customer redressal or unauthorized lending, fraud, even for that matter, giving a speedy decision to a customer, data breaches, name it. So the strong risk management practice alone is the need of the hour. And a strong risk management practice possibly can have an enabler like AI and ML, but on a human supervision alone, a risk management practice can be influential over a lot of aspects of this one, which can protect customer data, which can address grievances, which can have enhanced supervisions, and all the English that we talk. So that's my closing remark is that let's not talk only about the speed at which we should be moving. And speed is obviously given by your artificial intelligence and ML and all that. But speed without control, visibility, dashboards, brakes, and all that, it is only, it cannot even call a joyride. It's only a one-way ride. You're not going to be back.
Right.
So
Right.
risk management is something which needs to be strengthened for every single advancement that you see in technology. So that's my humble submission. So
Perfect.
over to you, Praveen.
Perfect. Thank you. Kunal, any closing thoughts from your end?
I'm happy to hear that, the MD and CEO is taking the risk management route. So as a CRO, I will take his route, and I would say that, there is a long way ahead. There is a very bright way ahead. We know, that we have not tapped what is the full potential of our country. Now, forget about the full potential. Even if we are able to tap 10% of the potential of this country, we are talking huge numbers, and there is a immense opportunity here. And at the same time, any kind of convenience, all these, the entire discussion is about enablement. Enablement is nothing but convenience, right? Any kind of convenience, when you are basically programming a convenience, you have to program for, the downside of it as well. And I think that is what the esteemed panel has been talking about. They have been continuously highlighting the knowledge of the people have to be combined with the knowledge of processes, as well as with the machine learning algorithms and stuff like that. And I completely resonate that. Happy to note that, risk is being discussed across. And then, like I said, we have, all of us have a, very bright future. The balance sheets are expected to grow. So all the best on that.
Perfect. Thank you. I think there can be no better and more positive note to end this really engaging and interesting discussion. I want to thank you all for sparing the time today. Really happy about this. I think my big takeaways, the human oversight over AI and ML, I think that will stick with me. The 500x growth that you spoke about, I think more power to that. And of course, a very bright future ahead. So once again, thank you so much for your time today. And I appreciate it. And until next time, it's bye-bye for now. Thank you.
Thank you, everyone.
Thank you.
Thank you, guys. Bye.
Thank you, Kunal. Thank you, everyone.